Look at this chart. On the left, Coinbase, the largest retail crypto exchange in North America, still limiting XRP trading pairs and refusing to list Ripple's own stablecoin, RLUSD. On the right, Deutsche Bank, Societe Generale, MasterCard, and the DTCC, all of them now running live infrastructure powered by Ripple technology. Now, I know some of you are thinking this is just another conspiracy theory video about exchanges suppressing XRP. It is not. What I am about to show you is a straightforward incentive analysis backed by public financial data that any investor can verify. Because here is what is at stake. If you do not understand why the biggest retail exchange in America is working against the asset that the biggest banks in the world are building on, you will misread every price signal XRP sends for the rest of this cycle. By the end of this video, you will understand exactly why this disconnect exists, who benefits from it, what it signals about where XRP is actually headed, and most importantly, how to position yourself on the right side of this institutional divide. Now, before we walk through the data, let me set the stage so this makes sense. Stop and think about this for a second. Coinbase generates roughly 60% of its revenue from retail trading fees. That is their business model. Retail traders buying and selling crypto on their platform. They went public in 2021 at a valuation north of $65 billion. They answer to shareholders, and their entire economic incentive is to keep retail traders active and engaged on their platform, cycling through tokens as frequently as possible. XRP represents something fundamentally different. Ripple's entire strategy since 2018 has been institutional adoption. They are building plumbing, settlement rails, cross-border payment infrastructure, custody solutions for banks, and now with Ripple Prime going live on the DTCC and NSCC as of March 2nd, 2026. They are literally embedded inside the infrastructure that clears United States securities trades. Here is your first data point, and it is a big one. Coinbase listed over 250 tokens as of January 2026. Many of them are meme coins with no utility, no partnerships, and no regulatory clarity. Yet XRP, which has a federal court ruling confirming it is not a security when sold on exchanges, still has limited trading pair access on Coinbase. That is not an oversight. That is a decision, and decisions have reasons. Now here is where it gets interesting. Let us follow the money. Section 1. Ripple Prime and the DTCC. On March 2nd, 2026, Ripple's institutional custody and settlement product went live on the Depository Trust and Clearing Corporation. I need you to understand what that sentence actually means. This is not a memorandum of understanding. This is not a press release announcing a potential future collaboration. This is live production infrastructure processing real securities settlement for the largest clearing system in the world. The DTCC clears approximately $2.15 quadrillion in securities transactions annually. Let me put that number in context for you. That is $2,150 trillion. Every stock trade, every bond settlement, every mutual fund transaction in the United States flows through this system. And Ripple is now inside it. But wait, it gets deeper. The NSCC, which is the National Securities Clearing Corporation and operates under the DTCC umbrella, handles the actual netting and settlement of equity trades. Ripple Prime's integration means that Ripple's custody technology is now touching the same infrastructure that settles trades for every major brokerage in America. Charles Schwab, Vanguard. Their trades clear through the system that Ripple just plugged into. Ask yourself a simple question. Does the DTCC integrate technology from companies whose core asset is dying or restarting? The answer is obvious. Section 2. The banking partnerships that nobody is connecting. Here is where I need you to zoom out and see the full picture, because most content creators cover these partnerships one at a time. When you line them all up together, The pattern is unmistakable. Deutsche Bank announced its digital asset custody integration with Ripple in late 2025. This is the largest bank in Germany, the 15th largest bank on the planet by total assets, with over 1.3 trillion euros on its balance sheet. They did not pick Ripple because of a YouTube thumbnail. They picked Ripple because their compliance team, their risk team, and their technology team all signed off after what we know was a multi-year evaluation process. Société Générale's digital asset arm, Forge, is using XRP ledger technology for tokenized bond settlement. This is France's third largest bank. They are not experimenting with XRP ledger for fun. They are using it because the settlement finality on XRPL is 3 to 5 seconds compared to 2 to 3 days on traditional rails. Now here is a number that should stop you in your tracks. Aviva, one of the largest insurance companies in Europe, managing over £400 billion in assets, is piloting cross-border premium settlements using Ripple's on-demand liquidity rails. Insurance premium settlement is one of the most conservative, heavily regulated financial processes on Earth. If Aviva's compliance department approved ODL, that tells you everything you need to know about Ripple's regulatory standing. MasterCard expanded its crypto-linked card program to include RLUSD, Ripple's stablecoin, which now sits at a $1.56 billion market cap after launching less than 5 months ago. Let me repeat that. $1.56 billion in market cap in under 5 months. USDC took over 2 years to reach that milestone. And the largest retail exchange in America will not list it. Think about that. Section 3. Why Coinbase is playing defense. Coinbase relisted XRP in 2023 after the partial summary judgment in the SEC case. But here is what most people miss. They never fully restored it. Limited trading pairs. No staking integration despite the XRP ledger supporting native functionality. No RLUSD listing. And critically, no institutional custody partnership with Ripple, even though Coinbase runs one of the largest institutional custody businesses in crypto through Coinbase Prime. So, why would the biggest retail exchange in crypto actively limit access to an asset that banks are adopting at scale? Let me walk you through the incentive structure, because this is the part that most creators either do not understand or will not explain to you. Follow the money. Coinbase makes money when retail traders trade frequently. That is their revenue model. High-frequency retail trading of volatile assets. XRP's value proposition is not about trading. It is about utility. It is about settlement. It is about replacing Swift infrastructure with something faster, cheaper, and more reliable. Every dollar that flows into XRP ecosystem utility, into ODL corridors, into RLUSD adoption, into institutional settlement rails, is a dollar that does not generate trading fees on Coinbase's platform. But it goes even deeper than that. Coinbase Prime, their institutional arm, competes directly with Ripple Prime for institutional custody mandates. They are not just passively ignoring XRP. They are actively competing with Ripple for the same institutional clients, while simultaneously controlling retail access to XRP on their consumer exchange. If you were running Coinbase, would you aggressively promote a competitor's ecosystem on your own platform? The answer writes itself. Section 4. The regulatory moat that changes everything. Now let me show you why this institutional paradox is about to resolve, and resolve in XRP's favor. The Clarity Act is currently working through the United States Senate, with approximately 70% odds on polymarket prediction markets. This legislation would formally classify most crypto assets and create a defined regulatory framework for the first time in American history. XRP already has the most favorable legal precedent of any digital asset in the United States, thanks to the Ripple versus SEC ruling that concluded with a $50 million settlement in August 2025. When this legislation passes, and at 70% odds on prediction markets, I am saying when, not if, XRP becomes arguably the most regulatory clear asset in the entire crypto market. It will have a court ruling, federal legislation, and active institutional integration all aligned. Here is why that matters for the Coinbase question. Right now, Coinbase can justify limiting XPR access by pointing to residual regulatory uncertainty. Once the Clarity Act passes, that justification evaporates. The competitive pressure from other exchanges that do fully support XRP will force Coinbase's hand. They will either fully integrate XRP and RLUSD, or they will watch market share flow to competitors who already have. Section 5. What the smart money is telling you. Let me bring all of this together because the individual data points are interesting, but the pattern they form is extraordinary. The institutions see it. Deutsche Bank sees it. The DTCC sees it. MasterCard sees it. Societe Generale sees it. Aviva sees it. 7 ETF providers see it. They are building on Ripple infrastructure because it works, because it is legally clear, and because it solves a real multi-trillion-dollar inefficiency in global settlement. Coinbase sees it too. They just have a different incentive. Their incentive is to keep you trading meme coins on their platform, generating fees on every buy and sell, not to promote an asset whose primary value comes from institutional utility that happens outside their exchange. This is not a conspiracy. This is capitalism. Every actor in this story is behaving rationally, according to their own incentive structure. And once you understand those incentives, the entire picture snaps into focus. The question you need to ask yourself is simple. Who do you trust more to evaluate XRP's future? A retail exchange that profits from you not holding XRP? Or the largest financial institutions on the planet that are embedding Ripple technology into their core infrastructure? I know my answer, and I think you know yours too. If this data walkthrough helped you see the institutional picture more clearly, do me a favor and hit that subscribe button. I break down these dynamics every single week with real data, real incentive analysis, and zero hype. This is what Channel B is built for. Drop a comment below telling me whether you think Coinbase will eventually list RLUSD or if they will continue blocking it until competitive pressure forces their hand. I genuinely want to hear both sides on this one. And if you found this analysis valuable, share it with one person in the XRP community who might be confused about why Coinbase is behaving this way. Knowledge is how we protect each other.